I'm going to the city and I'm gonna do a city show. And I know all my fans wanna learn how to make some dough. I've been cruising up and down for trades each and every night. And with my iPhone reclining, I know we're gonna get it just right. I'll get inside your mind, we'll have a real good time. We're gonna trade today, we gotta trade today. Go askSlim.
Hi, I'm Steve Miller. Call me Slim. And this is the askSlim Market Week. It's a look back at what happened in the financial markets in the past week, and a look forward at what might happen in coming weeks, and hopefully lots of great ideas and opportunities for you throughout this show. Well, stock market investors took the bait again early last week, hoping that the CPI and PPI would confirm that inflation had peaked and the Fed would soon be able to pause or even pivot. It had been a 4-day buying frenzy with S&P 500 futures moving up 290 points from their low the previous week, and again, biting that hook left them bloodied, as a big disappointment came when the CPI numbers showed that the core was actually up 0.6%. They expected it to be up only 0.3%. That shocking news Tuesday morning, which had the S&P futures up 32 points in anticipation of good news, saw them fall to almost down 100 pre-market. It was a 130-point drop in just minutes. And selling continued the rest of the day, with the S&P 500 on Tuesday down 179 points, the Dow losing 1,277 points, and the worst day in 2 years. Bonds, they were down also, anticipating Fed action of being tighter, and the dollar, which gains from interest rates going up, and especially up a lot more than other countries, well, it gained big also. Wednesday, the PPI came, and it was also hotter than estimated, and year over year, that's up 8.7%. That is some real inflation. Thursday, it was a choppy day. I mean, really choppy. The indexes moved up and down pretty dramatically, but overall, they were under pressure again and lost about 45 points on the day. The average mortgage came out as now getting up over 6%. From the start of the year, mortgage payments on average are up 38.5%. Talk about inflation. And that made the average mortgage payment go from $1,700 a month to over $2,300 a month. And of course, refis, well, they are plunging because very few people out there can benefit from these refi numbers. And I've anecdotally heard that some people are getting quotes on their mortgages up near 7%. So this is a tough time for home buyers and for home buyers on the interest rate, and home builders on sales who are now starting to see the effect of those higher rates. And also at the same time, employment numbers, they came out pretty strong. And the FOMC meeting, which is on the 4th and 5th of November, with the news coming out on the 5th, well, everybody now really is anticipating a 0.75% increase again. And of course, there are whispered numbers out at 1% increase, which I don't think that we're going to see this Fed do. Of course, anything is possible. Adobe came out, and that stock fell 17% on really weak revenue guidance, and the techs really took it on that news. Apple, Microsoft, all down a lot. NASDAQ was down 2%, and gold and oil commodities all under a lot of pressure. And what's going on is a liquidation, and when you have to sell things, you sell anything, and that's why we've seen these commodity markets moving down pretty sharply also. Friday, well, it was the Federal Express news that really affected the market. It came out with really bad earnings, a really tough miss. They've pulled their guidance now, and they warn of very negative economic trends, really. Well, the S&P 500, we talked about this several weeks ago, where there is an anticipation of 6.7% growth in earnings. And of course, the analysts then get to assign an average PE and then figure out why the valuations for the stock market are higher It's a bunch of nonsense, as is the fact that a 6.7% earnings growth this year, that is just not going to happen. And if anything, it's going to be an earnings contraction and a PE contraction. And all of that, of course, is not great for the markets over coming quarters, well into next year. Transports, well, they got slammed on the news on that big downside move in FedEx, down 5% on the day on Friday. And this is a very weak day again. At worst levels, the S&Ps were down 60 on the day. Now here we are at midday doing this show. They were trying to rebound, but they're still down about 50 points on the day. And we had anticipated that they would continue down through this week. And I think there may be a little bit of a rebound coming early in next week, and we'll talk a little bit more about that later, but it wouldn't be lasting for very long. Stock market is clearly responding to the prospects of inflation and the movements in interest rates. However, taking a deeper look at correlations, it looks like the algos and sophisticated large traders are very focused on the dollar. If you look at a dollar and compare that to the S&P 500, you'll see what I mean. I'm going to show you that chart. We're going to look at a daily chart, but the 5-minute chart, also variation of this, is very telling. This is the S&P 500 daily comparison to the dollar, and I want you really to see this is important because traders are really very focused on the dollar right now. And again, look at a variation of this chart on a 5-minute or 15-minute chart, and you'll see how focused traders are on the movement of the dollar. So this candlestick chart in here is the S&P 500, and at the same time, this line right in here is the dollar. And you can see in here when the S&P 500 is going down in here, it's because the dollar is going up. You can see that. Dollar up, S&P 500 down. The same thing in here. You could see the dollar down, S&P 500 up. Amazing inverse correlations that are going on right in here, as you can see. And here we've had this period of dollar going up and S&P 500 going down. But look at this right over here. The dollar is starting to look like it's topping. And if that's the case, sometime out over here, we're anticipating it's maybe 2-3 weeks from now, this dollar is likely to start moving down. And if that's the case, we're going to get into a period in here where the stock market will do better. But in the meantime, we think there's a lot of risk. What I want you to do, if you're a short-term trader, reconstruct this chart on a 5-minute or 15-minute chart, something intraday, and you'll be able to see how important analyzing the dollar is to the intraday trading. So wanted you to see that. I think that is very important analysis, looking at the dollar versus the stock market. And I think that's for short-term traders, I think it's really important that you focus on that. So our analysis really has shown that there is likely to be a downside move into late September, early October. And the dollar chart, if you look at that, we're really looking for a peak happening at about the same time. And right now, the inverse of the dollar is essentially the euro currency. And the euro currency is looking like a temporary bottom in here. So that looks to me like fairly soon we are going to see some kind of an upside move in the dollar. And when I say soon, it's a matter of some weeks. And that's probably going to be some source of a rebound for the stock market coming. Right now, there is a lot of risk into this late September, early October period, and we expect that the stock market will remain under some severe pressure, minor upside bounces that bring further declines. And we're going to show those levels later in the show. But that focus on the dollar, I think, is very important. We're going to look actually based on what we think will be some dollar topping or range trading for the fourth quarter to be a more positive quarter for the stock market outside of this big risk that we see over these next few weeks. We made that call actually way back in January, where we thought that the market would be down for most of the year and then be able to have a better fourth quarter. This is not a bull market resumption. There is no Fed pivot. That isn't coming at all. I want you to hear this. A pause that by the Fed where they get to a level, and that might be sometime in the early part of next year, where they just kind of stop raising rates for a while, that's going to bring a surge to the upside in commodities. You're going to have a feedback loop that will keep the Fed restrictive. They're going to see that. They're not going to be able to lower rates. And that's maybe all the way through 2024 or beyond. We see a very restrictive Fed for some period of time, maybe years. And that, of course, is going to be a problem for the equity markets. We still see this fourth quarter as a more positive period coming, and all of that living within a big, bad bear. For the week, here at the midday period, major indexes are down between 5 and 6%. The transport's the worst. They're down almost 9% on the week. It's just a nightmare. 30-year bonds, they're down about 1.25 points. 10-year yields jump again, up 10 basis points. The gold market, now it had a $30 reversal today, and there was a capitulation that I believe happened between yesterday and this morning, and then it made a decent upside reversal. And I think that is going to be at least a short-term bottom for the gold market. For those of you that want to see that analysis, please do watch Future Speak Show. Arvi does a fantastic job on that. You need to be a level 2, 3, or 4 member. The decline in the gold market was $40 on the week. It was really big, even after this reversal here on Friday. But I want you to note, silver's up 60, 65 cents on the week. There is a much different picture that we see in these commodity and industrial type metals in silver and platinum and copper. They look much better. And I think they're going to lead the way for a rebound here in the gold market. Dollar up about 0.5%. And I think it, like I said earlier, I think it's going to be in a range and toppy very soon. Oil market loses about 60 cents on the week. In overall weak patterns, we think there'll be some rebounds that they won't really be able to hold very well. So that's the opening, and I again encourage you to watch the dollar versus the S&P 500 charts for a lot of information for short-term trading. Coming up in this show, well, we have a ton in here. Arvi's going to bring you a member video, which he will preview that with short-term swing trade setups. He's going to show you Toll. That's the home builder, and it is negative. It is going to show you that multiple time frame analysis. Katie is going to illustrate the cycle low bottom tracker. She's going to give you a great cycle analysis lesson here, looking at Nvidia, which again is negative. I'm going to bring you a video segment in here. That's the askSlim focus list. We're going to look at the momentum conditions in 60 symbols. And I'm going to show you that I can review 60 symbols, the best 60 symbols to trade, in 10 minutes, looking at the momentum conditions in our proprietary indicators. This is an amazing segment, so I want you really to watch this. Then I'm going to show you how, for those of you that are first-time members or level 1 members to upgrade, how you can get our daily stock index report, our simulator momentum tracker, and other great features for just $10, 50% discount for 1 month, and you'll be able to see a lot of what we do. And then I'll bring the intermediate term view in SPY. I'm also going to look at the Dow Jones Transportation Index, which has an important tell in there. And the riskiest time for the stock market, actually, I think is just ahead of us, with the potential for the longs to capitulate. So really important stuff, and a lot of stuff, as you can see in this video. I have so much fun doing these shows, and my team does just an amazing job. I think this is the best analytical team out there, and askSlim gives you amazing support for traders and self-directed investors. I want you to make sure you go to askSlim.com. If you're new, become a free member. Take advantage of our special for level 1. On YouTube, subscribe to the channel. Click the notification bell, and you'll know when we put up videos. And like this video, give it a thumbs up. On Twitter, follow us at askSlim. And for any information you need about everything that we offer, write to Matt at askSlim.com. This is a preview of a member video looking at Toll Brothers. Ari is going to preview the stock sectors video, which he does every other week, and he shows you short-term swing trade setups. In this video, there are 5 long setups and 5 short setups. Now, the short setups are probably mostly have disappeared right now, but you'll see the analysis because the market fell so hard already, and it would have all worked. Our members did see this a couple days ago. So to see that full video, you need to become a level 2 member or higher. Arvi, show them this.
This is the weekly and daily cycle analysis for Toll Brothers. So this is the weekly cycle analysis for Toll Brothers, and you're seeing a theme here. We're highlighting a lot of underlyings that are late in intermediate term corrective periods. The reason we do that is because when you're late in corrective periods, the odds are good that you'd see any little upticks fail and then for sell-offs on the downside. So that's why we're highlighting all these names on the short side. In this case, in Toll Brothers, looking at this as a little bear flag, watching if this will turn back down one more time. Going to move down to retest this old low, basically around 40.20 into this timing, which is due 9:26 to 10:31. And that's the overall picture here. And Toll Brothers, not a great pattern clearly here. And what looks like, if we zoom out, a big top that has formed here in TOL. On the daily chart, this is also acting fairly well here. You can see we were looking for a bottom to form. We got that low, then got this modest bear flag that looks like it's already failing here. You can see it sold off right in our zones at this point, looking for a little upticks and then for this to sell off again. The zones are all falling, but they come in from 44.68 to 46, and we don't want to see it over the minor 78.6 at the 47 area. On the downside, looking for a move obviously through this old low first, and that's at 42.69, and then we have a 61.8 at 41.50, 78.6 at 40.30, and you can see this next daily low is only due around the middle part of October, which would sync up with that weekly timing as well. So good odds that rallies fail here, and given what we're seeing going on in rates, very low odds that Toll Brothers really makes a whole lot of headway to the upside here.
Great work on that. Thank you. This is a cycle analysis lesson. Katie does just a great job. She's analyzing Nvidia in here and just showing the extended negative conditions that exist in this stock. She looks at our cycle low timing tracker, which gives you an indication of where in a bottoming phase stocks are. This is great help for that analysis, and Katie just does a fantastic job teaching cycle analysis in this video.
Hi, I'm Katie with askSlim. On your screen is today's Cycle Low Timing Tracker. This is a tool that we've developed for our members that helps identify opportunities going into and coming out of cycle bottoms on both the intermediate and short-term time frames. Because of the principle of commonality in cycle analysis, it's not uncommon to see several symbols from a sector appearing on here together, and we're seeing that today with some of the semiconductor stocks from our focus list. Applied Materials, AMD, and Nvidia are all in their daily cycle timing windows, and that is why they are appearing in this box and this column on the Cycle Low Timing Tracker. Now, while they're all setting up similarly, we're going to take a look at Nvidia. Let's first look at the weekly chart. This is a 5-year weekly chart of Nvidia. On the bottom, we have cycle brackets that are 24 bars in length. The cycle brackets are not the actual cycles, but simply a drawing tool that helps us to identify money flow patterns. The purple spikes show where the actual cycle lows occurred relative to those ideal cycle brackets. Two other closely related aspects of cycle analysis are translation and configuration. Translation refers to where the cycle peak occurs, and it can be left-hand or right-hand. Right-hand translations like this one are generally bullish because there isn't much time left in the cycle for a decline. Left-hand translations like this one are generally bearish because there's a long time remaining in the cycle for a decline. Now, configuration refers to whether a cycle ends higher or lower than where it began. It can be positive or negative. This cycle here, for example, is negatively configured because it ended lower than where it began. Left-hand translations and negative configurations often go hand in hand. Another feature on our askSlim weekly charts is the reversal scout, this green and purple ribbon. It's a proprietary momentum indicator. Notice how it turns purple shortly after a cycle peak has formed, and notice how it turns green shortly after the cycle bottoms. In this current cycle, we have already got a negative reversal scout, and we have also broken below this key cycle low support. So what we're looking for in the intermediate term is a short side opportunity if Nvidia can get a bounce up into this minor resistance zone that runs from 152.67 on the bottom to about 168 on the top, with a 78.6% fib at 178.86. Now that would give us a high probability short side setup going into this weekly timing window that runs from December 8th through January 13th. We have these projections on the downside that run from about 119 down to about 101. Switching quickly over to the daily chart, you can see that we are currently in the daily cycle timing window that's represented by these blue vertical dashed lines. It's a period of time around the ideal cycle low when we expect it to make its low and move up into the rising phase of the next cycle. So that is why Nvidia is found in that section of the cycle low timing tracker. So the period coming out of this timing window and moving up into the rising phase of the new daily cycle may give us that bounce opportunity that we're looking for to set us up for a possible short side trade. These resistance zones on the daily chart correspond very closely with the minor resistances on the weekly chart. To learn more about cycle analysis, the cycle low timing tracker, and all of our tools and services, please visit our website at askSlim.com.
Fantastic. This is a look at our focus list, 60 stocks and ETFs. It's 48 stocks, 12 ETFs actually. And in just a matter of 10 minutes or a little bit more, I'm going to show you the momentum conditions in these stocks using our proprietary indicators. You'll be able to get these proprietary indicators as a level 4 member, but you'll get some of these as level 3, and there's just fantastic information here. And I'm going to show you this really quickly. Okay, this is a special look at our askSlim focus list. These are really the 60 best traded stocks and ETFs, and our members get to see this along with 24 futures contracts. I'm just going to show you the stocks right now, and I want to show you momentum conditions with our proprietary indicators and how you can just fire through these and get a very good sense for the condition of each of these stocks and ETFs. Let's take a look here at this chart, and you're going to see how fast I do this. So keep your eyes open. As you can see, this is a chart of Apple, and this chart up on the top is a variation of the way to see our slim ribbon, which shows you when it's in a positive, neutral, or negative condition. The next line down over here is the slim ribbon PO. The colors match the slim ribbon, but then we get momentum resumption signals that you can see right in here, and it gives you a good indication of when a stock is in a good condition or a rough condition. And you can see here on the bottom, this is the askSlim option bias indicator, and this is really was created to help option traders keep their positions biased in the best direction, to be able to stay out of the way of getting caught on the big momentum moves, and of course to keep your position directed with the best momentum conditions for you to maximize your performance. As you can see in here, when it goes orange, you get warnings. It can be a bottom warning or a top warning if it's up on the top here. And you can see how good that was here. Also, you can see right here where the condition turned negative, and then you had that pop right over there in Apple, and it stayed negative, and of course the stock came down very hard again. So these are just a great momentum indicators and a great sense for how to understand the condition of a particular stock or ETF. So what I'm going to do is I'm going to fire through these very quickly, and you'll get a very good sense for the condition of each of them. So this is Apple, as you can see, and now I'm just going to move through them very quickly. So watch this, and you'll see how I do 60 stocks in just a matter of moments. There goes Apple. Here you have Applied Materials. You can see it is negative under all conditions, resumed to the downside. Here you can see AMD. AMD, very similar to what I just showed you in these other techs, quite negative. This is a picture of Amgen, and that you see on the bottom right, bottom warning there. So we're getting an indication because the oversold condition is so strong. Now, one thing about the option bias indicator is that it's one of the few indicators that has a built-in volatility aspect to it. So that is very oversold in Amgen and likely to be turning around soon for at least a bounce. Amazon, take a look at this, that big negative condition that exists there. And you can see how good when it was positive, how those signals were coming on the slim ribbon PO. These, of course, all proprietary indicators for our level 4 members to be able to get these kind of live charts. Here you can see Broadcom, quite negative when you look at that. We'll get to some positive stocks also. Boeing, you can see that's in negative condition also. Look how good it was when it was in positive condition. Beautiful signals in there while it was going up. Here you could see a couple of top warnings. You see there on the option bias indicators, those orange dots really nailed those short-term tops. And look at this negative condition in Baba. That's Alibaba Group. This is Baidu, still quite negative, as you can see right in there. This is Caterpillar, not being able to turn positive on that upside tick we had last week and now in negative condition. This is Costco, same thing, negative. Salesforce, looking quite negative when you see that, and that good resumption signal with that red arrow. Option bias indicator, been very reliably negative. Here you could see this is Chevron. Of course, this is an energy. They're much more positive. Look at that 4 orange dots that you can see here in the option bias study right over here, how it pegged that bottom. Look at the 2 orange dots here, peg the top right over there, and still under positive condition and about to give a upside signal in there. So here you could see a good example of why this is so important to really be able to create a portfolio that has positive and negative stocks in there. Here is Deere. It was doing really well. It's now neutral and definitely a stock that has been stronger. This is Disney. Disney trying to put in a bottom in there, but now it's turned negative again with this downside market momentum. So we'd call this stock kind of mixed right now in Disney. Meta still looking negative. It tried to go neutral, but you could see as it had turned negative again, and now the stock falling hard. This stock, FCX, Freeport, the material's trying to do a little better, but I would call this mixed condition looking at that. This is FedEx. Now, FedEx down an amazing 22% today, and you can see it's been negative. I mean, clearly this has been telling you that there is trouble, and now you notice that orange dot down there. That in the option bias indicator, it was red, it was negative. You can see all of that, and now it says that it is an extreme oversold condition. So somewhere in here, probably in the next few days, there will be a short-term rebound. First Solar, the solar stocks have been great. We have loved them, and look at how clearly this gave you that indication for that whole upside momentum move, and it still looks good. Here's Goldman Sachs. They were trying to bottom, but couldn't really get much in there. The option bias indicator is neutral. You can see yellow, and that's because the longer term indicators in there, and that's a multiple time frame indicator, are giving it a little of a supportive look to it. So we would call Goldman Sachs as mixed. Home Depot looking clearly negative there, and we don't need that news coming out there. I'm going to fire through these now a little bit faster so that you can get a good sense for how this really works. You can see in here JP Morgan is looking better and potentially a stock that has some upside in it here when this selling squall is over in the stock market. Love, Southwest Airlines, kind of negative again. You can see it turning that way. Here is Las Vegas Sands. They have been trying to bottom these stocks in the gambling area, and this is a stock that I think is buyable when you look at that. McDonald's on the negative side, you can see clearly there. Morgan Stanley, so this has turned neutral again, but like the other financials, they are starting to show some resilience, as you can see. Now look in the bottom, option bias indicator, still green, and I'm still telling you that there's a potential for upside in here. Microsoft, that false rally that you had in there, clearly was negative, and you can see on the bottom that the option bias indicator stayed negative, stayed red through that rally, and then you had the resumption signal. Micron negative, multiple resumption signals on the downside. Newmont Mining, you can see, look at how long that has been red in there. I don't know why that cycle bracket's in there, but we'll remove that. And look at this, unbelievable. It has kept you on the short side, on the negative side through that whole time period in there. We're looking 6 months back, and you can see the value of that. You wouldn't be certainly buying that one under that condition. Here's Netflix. Netflix trying to bottom. You can see it's now turning neutral on the option bias indicator. It has now turned green on the daily short-term momentum, and that says to you that investors are anticipating that their new model that will allow advertising is likely to work in a big way, and that stock acting better. That's Netflix. Here you can see Nvidia, quite negative, special that Katie did on that today, and I think you'll enjoy her lesson that we do there. Here is Oracle, negative, you can see that. Here is PAAS, another one of the metal stocks, and it's been mostly negative through this whole period, as you can see. This is a look at PayPal. PayPal trying to put a bottom in there. You can see that it's turning positive in momentum, and I think this one is buyable when you look at that. And now take a look here at Roku. Roku is trying to neutralize there, but look at the option bias indicator on the bottom. It's still not being able to get neutral yet there, so still maybe bottoming, but a little bit of problems. Here is Starbucks, this one looking much better, as you can see. Square still looking negative. Toll Brothers, which is negative, and RV did a special video on that in this show. Here is Tesla, TSLA, and look at that one is much stronger than some of the other in the group. Twitter looking positive, it's holding in there. United Airlines, that's even another airline that is looking strong. That has some positive indications there, as you can see, even with this market getting slammed. Here is Visa, negative, clearly negative. And here is Walmart. Walmart, well, it was positive and going neutral, competing well, I think, against Amazon, and Amazon getting hurt by what we saw in FedEx going on and UPS. So Walmart looking better than those are. Here is Win neutral, and that was coming off of negative. And I think looking at Las Vegas Sands, it's probably telling you this one's going to do okay. Exxon just getting neutral now. It was very positive, as you can see, with the rest of the energies. Now, quickly, we'll look at these ETFs in here, and you'll see the semiconductor index looking still quite negative. Same thing for the biotechs. Here, the XLE, the energies, now neutral. When you look at the momentum conditions, the option bias indicator is still positive, and that's because of the long-term positive weeklies in there and monthlies that are indicated, that are saying that a dip in here is probably a buy. XLF, the financials, they were trying to neutralize, but now have turned negative, though the option bias indicator neutral. We'll call this one mixed. XLI, industrials, negative. XLK, the technology, negative. You can see all that. XLP, these consumer staples, those are negative. XRT, which is the retail still negative. You can see that. You can see the top warning that we had in there if you go back and look at that. EEM, emerging markets, well, they're looking pretty terrible also in there. And last few that we'll look at, this is the stocks, 50 European stocks. You know, we were very negative in there. Here is China, still negative. You know, we were negative in there. And the GDX, the gold ETF, getting absolutely hammered. I think we're in a capitulation in the gold market. So I wanted you to see that, an unbelievable way to look at 60 stocks in minutes. This was 12 minutes long looking at that. And where can you get that much information in this brief period of time with our amazing proprietary indicators? I hope you absolutely loved it. Okay, I'm going to show you the stock market, looking at the S&P 500 and looking at the Dow Jones Transportation Average also. But first, how about getting our daily analysis for $10 a month? What is that, 33 cents a day? This is our level 1 special. It's 50% off for 1 month. You're going to get our stock index report that looks at analysis on the S&P 500, NASDAQ, and the Russell. All of my charts are in there, all of our projections, key levels, tons of momentum information. You'll just love what's in there. Our Slimulator momentum tracker for investors and position traders, over 1,000 symbols, and there's groups in there. All of our algorithms programmed into there, and you get our directional bias and momentum indicators. Fantastic for, again, longer term holders. You'll get the Spider weekly ETF review, and you'll get great resources for trade planning. Again, that stock index report is daily, so you get all of our information every single day. That's what daily means. Please do go to the top of the askSlim page, click that Learn More button up on the top. You'll see what we have in there, and you'll be able to subscribe for $10. Amazing. All right, this is the stock market. We're going to look at the S&P 500 and the Dow Jones Transportation Index. It's an intermediate view. We're going to look at 1 to 3 months. If you want to see the shorter term analysis, which lots of people want to see, of course, you can just get that from our daily stock index report. Matt puts that out every day. You can get that for $10. So if you're brand new, if you're not a askSlim member, or you're a free member and you want to upgrade, you'll be able to get that short-term view and our full analysis on the stock market for $10. So please do take advantage of that. All right, so let's switch over and look at the charts in here, and let's take a look. We'll remove this dollar comparison. If you want to see that, watch the beginning of the show. This is the S&P 500, SPY. Of course, this big rally that you see right in here was the period of the massive bubble that was created by the Fed, and this is the beginning of what we think is the reset in there. These, if you're brand new, are cycle brackets, and what these are just a guide. They're a drawing tool and help us understand the rhythm in the market. It essentially is the heartbeat or the money flows that are in the market, and the areas where those yellow ovals are, and you can see them on the bottom, also is where the greatest risk is to the downside. And you could see in these uptrends, these risky periods don't give you a lot. You get higher highs and higher bottoms, but then when you get a negative cycle like this, it sets up more negative cycles that you see right in here. So this decline in here took you down in the S&P 500 to roughly 361, down in there, that level right over there, 362, close to that. And then we had a good rally. Let's take a closer look right in here, and you can see where we are. So again, we're in this period of risk where this yellow oval is right over here, telling you the highest probability is that the market will move to the downside. And you see that happening right now. Also, I want you to see that the right in here is the reversal scout. And when it peaks, like you see right in here, usually it moves down through the low of the cycle. This was the minor cycle. Here's where it turned up, told you that the market was going to move up. And here's where it turned down here, setting up what was this decline. Now, we had anticipated through our intermediate and short-term analysis that the stock market would be weak through September. The big decline you see right on here, which is about 5% on the week, is not likely the end of this drop. Now, we talked about it getting down to 388, which would be our minimum objective in a more positive condition than we thought we were in. Here's 377 right over here, which is a very likely target. And to really satisfy these cyclical conditions, it really needs to take out this low. Now, the actual low price right there was 362. So that is a pretty good target over these next few weeks. We're going to be looking for a potential false little rally in here for a few days, and maybe some kind of a rebound. But then after that, more to the downside. There's also a possibility in here that this moves down towards this trough, this major 50% level right over here. And if it did that, it would probably push out into October if that happened, and that's down at about 350. In either case, what we expect is that this decline would come maybe down to 377 or 362, and then get this period out over here where we talked about in the beginning of the show that we have a more favorable Q4 setting up. Again, this being another rebound or false period of rally in what we believe is going to be an extended bear market out into 2023. So again, this is a very weak period. There may be a little rebound in here, but we think it's going to keep declining. 377, 362, and 350 are the numbers that we're looking at on the downside, and that should finish it up for this year as far as the lows for the year. Then comes the rebound, and we'll see where that comes from and the kind of intensity that it can get on the upside. It's not going to get support, excuse me, from the Fed. That is very, very sure. All you're going to get is people thinking that they're anticipating a peak in inflation, that the Fed is some time going to stall. And as I said in the beginning of the show, when that happens, we're going to look for a big, big upside move in commodities. And that commodity move will signal more inflation and keep the Fed tight, and will very much limit upside to the stock market as we get late into this fourth quarter and into the beginning of the year, where we think there is a lot more risk. Let's take a look right now at the Dow Jones Transportation Average. I'm going to put up $DJT on this platform, and this is just amazing. So you can see that big rally that occurred in there. In this case, I have two different ovals. When a rising phase begins, we have the green oval right in there, as you can see, and in a declining phase, you have the yellow oval, and that's where you get these declines, where these the energies are corrective in here, as you can see here and here and here. Note what it did in here, and it made this beautiful head and shoulders top in the Dow Jones Transportation Average. And the reason that you get head and shoulders tops are because you have an uptrend, then it makes a left shoulder, and then it makes a head. But what happens is that it gives a lot of it up. And then when the right shoulder is formed, you get a rising phase in the cycle that aborts very early, and it sets up a decline like this. That's what the head and shoulders are made of. Head and shoulders are just not, these patterns that come out of nowhere. They're made by the cycles, by the energetics. You can learn about cycle analysis at askSlim.com. Just go to the tab for Cycle Workshop, and there's a ton of information there. So here we are again in this declining phase right over there, and that is suggestive of the fact that the stock market still has more to go on the downside. I don't think the Dow Jones Transportation will make that way down over there where you see the head and shoulders measurement over here. It's probably early next year when it's going to get down there close to 10,000 on the downside. But right now in this period over here, which again bottoms somewhere late September, early October, we're likely to see further declines here in the transportation average. What happened to FedEx, which broke the market here on Friday and sent other stocks down that are affected by the economic slowing, that's not going to end right now. There is more time to go in here, maybe a lot more time to go, and this is just a horrible pattern looking at the Dow Jones Transportation Average, and suggestive of the fact you can see how this is where that low came in June, and the stock market hasn't gotten down there yet, but the transportation average did take it out, and it's very likely that the stock market's going to take out that June low also, and it's a reasonable target down over here at just under 11,000 that it gets there in the next few weeks. So a lot of pressure likely to still come from the Dow Jones Transportation Average, and overall this picture I gave in the stock market really says that there will be a few weeks in here, 2-3 weeks of potential, a lot of downside still, and then you will get into this Q4 period where the market is likely to get some traction and be able to hold in there and not make lower lows and make some upside gains, all within a big bear market. I want you to see the full analysis if you want to see the short-term analysis on all of the indexes. And so many people will write to me and say, well, you only showed the weekly chart. Where's the daily charts? And of course, our members all get that. And if you become a level 1 member for $10, you can actually get that also. So all you have to do is sign up. You'll get all of this information. And here, click the Learn More button up at the top of the page at askSlim.com, and all the information will be there about everything you get for 1 month for $10. That's 50% off, and you'll get our daily stock index report that Matt does a phenomenal job in. Absolutely fantastic. Go to askSlim.com, sign up for that level 1 special, subscribe on YouTube, click the notification bell. Don't forget to give us a thumbs up, and make sure you watch the member videos in our playlist. Follow us at askSlim on Twitter, and ask Matt at matt@askSlim.com for any questions that you might have about this great site at askSlim.com, the premier site for support for traders and self-directed investors. I want you to be so unbelievably careful. It is so crazy out there, and I'm always wishing you great trading.
Well, I'm going to sit